Hi guys, good evening, good afternoon, wherever you are joining from. So if you can hear me clearly, I want you to type on the comment section. Just say one, type one on the comment section. Let me know you can hear me clearly. Okay, guys. Lola, I can see you. How are you doing? How are you doing today? So let's go on to the business of the day. Today we'll be talking about support and resistance. Support and resistance. Now, what is support and resistance, guys? Does anyone know what support and resistance means? Now, let's go. Support and resistance is the backbone of technical analysis. Funny enough, everyone seems to have their own ideology when it comes to support and resistance. But when plotting support and resistance, you need to consider if the trend of the market, if it is in an uptrend or a downtrend. You get? So for some people, when constructing or when plotting support and resistance, they tend to take the higher, for example, is an uptrend. They tend to consider the higher highs and the lower and the higher lows. Sorry, the higher highs and the higher lows as being support and also what resistance. So what I'm trying to say is, let me see if I can share my screen. Okay, let's look at this. Okay, let's see this. Now, in this, can you see my screen? Guys, can you see my screen? Type. Let me know if you can see my screen. Okay. Now, from this picture we are seeing here, you can actually see that this move is actually an upward move. I guess you understand what an upward move means. So now, this is a higher low, this is a higher high, this is a higher low, this is a higher high, and this is another higher low and another higher high. So on this chart now, you can see that the higher high is regarded as what? As the resistance. And this is also regarded as the what? As the support. Now, when creating the nest, you see that this resistance has been broken. When you draw your trend line here to this place, this resistance is supposed to respect this point in price here, this former one here. But because it broke it and came and created another higher high here, so this resistance has been broken. So it makes this one a higher high. It's what created this higher high. And then this is another support here. It came. So this respected the law of what? Bullish trend, uptrend. So continuous higher highs and higher lows makes it what? A bullish trend. You get? I don't know if you understand. If you understand what I'm saying, type one in the comment section. If you understand what I'm saying. So now, I've stopped sharing. I wanted you to understand what I was trying to talk about. So now, when the market moves up and then pulls back, remember that higher high. When the market moves up and then pulls back, the peak reaches. You understand? I don't know if you get what I'm saying. So support and resistance is not just a random area where prices turns around. You get, it's not just a random area where prices turns around. Support and resistance are areas where when prices get there, it will create what? It will create a reaction. It will create a reaction. For example, if we are to go to, how they call it, if you are to go to, soon I'll share my screen on the chart, trading view chart on its own, so we can see what I'm talking about. Now, when you say support and demand, when you say support and demand, you are trying and support, resistance and support, sorry. It can also serve as what? Demand and supply. Now, these are places where, for example, in that previous chart I showed you, that higher high it's created, it shows that there are what? A lot of what? Sellers there waiting to bring the price down. You get? So it could serve as a supply zone. You get? So that support is serving as what? As a demand zone. So which means that once price gets to that place, buyers are there at that lower high. Once price get there are a lot of buyers waiting there to take the price up. So when it gets to that supply, that is the resistance zone, sellers are also there waiting to bring the price down. So continuous movement of or pullback of this high and low creates what? Create a higher peak and peaks. So it will continue like that until the market structure changes. So that's what I'm trying to explain right now. So like I said before, resistance is also known as what? Supply. And support is also known as what? As demand. And I repeat again, resistance being the supply are points or price area where sellers are waiting to what? To sell. So in such areas, you will notice that whenever price gets to those points in price, there must also always be a reaction in the market. And same thing goes to support, which is also what? The demand zone. When prices get there, there's also a tendency of high volatility in buying. So most traders, based on their trades on support and resistance principle, and it's proven way of trading in the forex market. You understand? A lot of traders, they just depend on that supply and demand, and it works. It's a proven way. So when you study very well and you know the key areas where to concentrate on, you will know when to buy and when to what, and when to sell. So what are the ways? What are the ways you can draw support and resistance zone? The ways to draw support and resistance zone. It is important to know that this zone should not be viewed as lines. Like most people will just go on the chart and just draw lines. No, I would like us to view this supply and resistance area as a zone. As a zone. I normally like using my rectangular tool to plot it out. You get? I see those areas as zones. So when you take them as zones, it's really work. You really understand what you are doing. So what are the things you are supposed to use hand in hand with this resistance, supply and resistance, to get the accurate listing? One, you need to take into consideration your psychological levels. Remember, psychological levels are random figures. Understand? They are random figures on which you base your analysis on. For example, if you go to the market and you want to buy something and they are telling you that price is 121 naira. Ordinarily, psychologically, if you want to price, you can just say, okay, can I buy it for $100? Can I buy it for $120? You just round up the price. So when you're rounding up this price in trading, it helps you stay at alert. It makes it easier for you to focus and know where to channel your focus or your area of interest at. You understand? So using psychological level also, you also be able to know where the big market movers are paying more attention. You get? When you use psychological level, you're able to know where these big market movers are paying more attention to. So they are derived simply by using the horizontal tools on your chart, and the horizontal lines are targeted at random numbers on your chart. For example, let's say we are to add up numbers in, let's say, for example, gold, that to round up for gold. You know that normally gold we have, as at present now, gold, I think gold has done up to 2,400, let's say 2,400. So if we are to plot psychological levels for gold, what are we supposed to do? We are supposed to calculate 100 pips. No, gold is very volatile. So when calculating, you calculate 100 pips. So what are we saying here? We are saying that when you have in gold now, when you have, let's see, when you have 2,400, the next you are looking at having in gold, you say 2,410. That will give you 100 pips. And then you go further and say 2,420. That will give you the next psychological level. And then 2,413. That will give you the next psychological level. Now, ordinarily, when you plot these psychological levels out and you look at your resistance and support, you will notice that the areas where these reactions take place are close to where? Are close to the psychological levels. They are close to your psychological levels. So when you plot these your psychological levels and you plot and you figure out areas where there is always price reactions, that's where the demand, where there are demand, more of demands, and where there are more of supply, you realize that they are close to the psychological levels. So that's the reason psychological level is always very important for you to plot before you start anything in trading. You get? Now, we'll go further to say that another powerful ways to draw psychological support and resistance is one, you select any of your favorite charts. You can say, okay, like gold, let's say, for example, gold. You follow the process that you have been saying so far. You follow the process, then you mark out the swings eye. You know, swing eye, remember, that's the level of higher high and higher low. They are regarded as your swing eye. So from one low to the next high is one swing eye. Then when it comes down is another swing low. Let me show you that chart again. Now this is what I'm talking about. You see, from this place to this place is one swing high. This place to this place is another swing, is a swing low. This is a swing high. This is a swing low. You get? So when you are looking at it in this, when you do it, when you follow it in that pattern, you'll be able to easily identify your what, your support and resistance. So by so doing, you'll be able to identify the peaks and the trough. Remember, when drawing your trend line, you are looking for what? 2 pips. It can be more than 2 pips, but at least 2 pips must touch or 2 troughs must touch. So when you get those pips and trough, those areas are where you mark out and you check if there were other in previous events, if those areas had any other reactions in previous events or in previous times when prices got there previously, other times, if there was any reactions that occurred in those areas. So it will help you know if those zones are actually your resistance zone or your support zones. So now, based on moving average, there are so many other stuff you can also use also. So I don't know if there's any question you need to ask regarding support and resistance. Let me know. If you have any question, just type it in the comment section below so I can attend to. Are we? Any question at all, you can hit me up, hit me up, hit me up, hit me up. So now let me go to, let me share my no questions. All right. That means everything I've been saying so far is, let me share my screen on Google. Now, can you see my screen now? Can you see my screen? Type. Let me know if you're seeing my screen. Type. Gold is falling massively, guys. Gold is doing magic. Let me know if you are seeing my screen. Okay, guys. Okay, yeah, you can see my screen. Now, see what I'm trying to talk about on support and resistance. Uh, mm, let's see what good is going to do here. Now, see what I mean by support and resistance. Now, for someone that trades support and resistance, what are the things you look at? For one, imagine what happened here. Imagine what happened here. Now, come to this place. Imagine what happened here. So, which this simply tells you that there are strong market movers on these price zones. You get, on this price zone, there are strong market movers. So now see what happened here. Price got to this place. Sellers came, they pushed it down. Price came up again. They said no, they came, they pushed it down. You get, price came, played, came down, still went here. Now, this place is telling you that there are tendency of buyers here compared to here. You get, now it takes a lot of momentum on a lot of activity, a lot of volatility for this to break this zone and then go up. And then when doing that, you need to put into consideration knowing that anything can happen here. You get, and then remember there's a first touch, second touch, third touch. What happens is boom. Those are the things you look at for. When there's a first touch, there's a second touch, resistance. Then the next second touch, yes, resistance. The next touch, you should be expecting a breakout. So that was what happened here. Now come again, look at this place now. See, you got here, it moved up. You got here, it moved up. You got here, still a lot of pressures around here. So these are the zones we are talking about. This played out yesterday. I actually took this trade yesterday, but I took it to this level, not knowing that it will. But today, I've not taken any trade today. I've been busy. I've not been able to enter markets today. But this is what happened yesterday. You can see. I was waiting for it here. First touch, second touch, third touch. You get. So this was what happened here. This is a demand zone. Ever since price has been getting to this zone, it has been doing, see, ever since price has been getting to this zone, it has been shooting up. You see? You see? You see the activities happening in this zone. It's massive. Are you seeing? So this is a strong support zone. So that's why when I monitored this trade and I saw that price was coming back to this region, I had to take it. And you see, it went as I planned it. Now see, see this zone again. There's another zone here. You get, so it's to monitor what we are going to do here. If at all we are going to take this trade, because the momentum, the seller's momentum in the market right now is crazy. So if you are taking anything for buy, you need to be very careful. But when you get to this place now, you need to watch out for the candle breakout. You need to watch out for candle reaction, candlesticks reaction before you can dive into this market. You need to be very careful because the sellers have a lot of power. The sellers are in control of this market for now. But this is crazy. Can't you see? Market actually conquered a lot of pips today. This is 100, 200, 300, 400, 500, 600, 700, 800 within the space of how many hours? Let's see. From 4 p.m. to 6, that's 2 hours. Gold has done almost 800 pips. This is crazy. So guys, I don't know if you understand what I'm talking about regarding this supply and support and resistance, support and resistance. Type in the comment section. Let me know if we are together so we can, because I'm going to give you assignments. When next we meet, I would like for you to, but just type, let me know if we are together, if you get what I'm talking about. And if there's any question, you can unmute and ask your question if you have any question. You raise your hand, I will give you access, then you ask your question. I'm waiting, guys. So when next we meet, we'll be talking about candlestick, Japanese candlestick. Well, I don't know if you would want for us to talk about it today. What's the time now? How many minutes have we been here? Oh, you want us to talk about it today? Candlestick. You can't talk about everything in trading today. What are you saying, guy? We cannot talk about everything candlesticks today. Now, candlestick was invented by who? Oman Mane Issa. He invented candlestick, which is known as the father of candlestick chart pattern. Candlesticks are long. Let me see if I have. I would like to share my screen to show you how a candlestick looks like. La, 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 la. Not this. No. Sorry guys, I'm trying to get a candlestick chart pattern for you so that as we are going, I will just be showing you. It'll be easier for you to understand what I'm saying. Mm. Okay, let me just do this one. I can find here. Let me use this one. But guys, before we forget, um, in trading support and resistance, you have to follow the chart pattern. Before I forget, you need to follow the current chart pattern. The other one was the uptrend. There's this other pattern that we call channel. It's called channel. This is how it looks. Let me show my screen and show you. So when you see a channel chart pattern, it is formed by connecting at least two consecutive swing lows and highs using the trend line. You get price channel is a trading technique that is borrowed from traditional trend line. Basically, trade signal is taken if the price breaks any of the parallel lines. So when you have two lines like this, it has to obey the two swings. Okay, let me show you. Let me share my screen so you see what I'm talking about. Now, this is what I mean. This is what I mean. So this is what I mean by channel. Now you see this trend line here. You see this other trend line here. It shows that price is respecting this trend line and this trend line. So once price comes here, price hits here, comes down, hits here. Price cannot break out of this trend line. Whenever price breaks out of this trend line, it shows that it has changed the pattern. You get, it has changed pattern. So this is this place now acts as it acts as resistance, while this other one acts as a support. The one below acts as the support, while this one above acts as the resistance. Hope we are clear. So chart pattern follows support and resistance depends on your chart pattern at that particular point in time. Don't forget that, please, guys. Oh my God. I guess we are enjoying this class. Guys, are we enjoying the class? I was trying to talk about candlestick formations before I remembered to inform you guys about that pattern and its various. Okay, guys. So, talking about candlestick formation, let me share my screen and show you guys. Now, this is what we call candlestick formation. Mind you, this is what? A bearish candle, and this is a bullish candle. Are we together? This is a bearish candle, and this is a bullish candle. So now, this candlestick here shows that at this particular point in price was where the market opened. Here was where the market opened. Actually, the market opened here. Here, opened here. Buyers were able to push it up. Sellers brought it down here and continued pushing it down till it got to this bottom, and then buyers pushed it out and it closed here. Should I come again? This is a candlestick one, and this candlestick is known as a bearish candlestick because of the color is a red, and let's assume it's a bearish candlestick. So I'm going to address this candlestick as a bearish candlestick because it's red in color. Now, this bearish candlestick, the price opened at this top, this week. This is called a week. So the price opened at this weak point. The sellers were able to push the price down. Sorry, come again. This is a bearish candle. The price opened at this point, this particular point here. Buyers came in and pushed this price up to the end of this week. Sellers came and pushed it down back to this opening price and then continued pushing it down till it gets to this place. And then buyers came and pushed it back up until it closed here. So now we are saying that this is the open, this is the close of the candle. This is the opening of the candle, and this is the closing of the candle. Now, this is a bullish candle. This is the opening of the bullish candle, and this is the closing of the bullish candle. Now, what happened here? Markets opened at this price. Sellers come, pushed it here. Buyers came, pushed it back to this opening, and continued pushing it till it got to this peak. And then sellers came, they pushed it down back here, and the price closed at this point. If you understand, kindly type 1 in the chat button. Type 1 if you understand what I just explained. Please, if you understand what I'm saying, okay. Let me see what's. Okay. I like that. I like that. So now, candlestick pattern has different. Candlesticks are long bars with shape that responds up to. So we are done with this chart, so I'm closing it. Now, as we are saying, when it comes to candlestick, we have the wick, like I explained before. I don't know, let me check that chart if you can. But did I explain that this? Okay, I explained the wick parts, which is this. These are called the wicks of the candle, wicks. Then there are sometimes you see the wicks are usually very long with a tiny body, which is known as what? Doji, indecisive candlesticks. So let me go down and see if there are other type of candlesticks. Okay, perfect, perfect, perfect. Now, this is what I was trying to explain earlier. This is a high, this is a low. Remember, this is a bullish candlestick, and this is a bearish candlestick, like I said before. So remember, I said in the bullish candlestick, it normally opens here. Sellers will come, they'll push it down. It will go back to the opening price, and then they'll push it up. Sellers will come, they'll push it down, and it will close here. I don't want to say too much about it, so I just want you to see what I actually meant by what I was saying. And most often times, you will see that the wick is usually very long. It's usually very long. So now, when you see a candlestick that has, let me show you, there are major type of candlesticks in the market. We have the one we call the bullish engulfing, which is and this is dodgy example of candlestick. Like I was saying, a very long wick and a small body, longer wicks. These are what? Dodgy candlestick. Whenever you see the appearance of this candlestick, it tells you that what? There are indecisiveness in the market. Indecisiveness in the sense that the buyers and the sellers are struggling on who to win the race. They are struggling on whether the price should go up or the price should come down. So that is when you see this candlestick, it tells you that please kindly hold on and wait for the next candlestick that will come up. If it's in a 1 hour candlestick, you wait for the next candlestick to close for you to know the direction of the market. Because if you see like this and you say, okay, because you've seen like this, probably the market is in an upward trend. And because you've seen something like this, you say, okay, you want to still go for upward. You won't know that, okay, maybe it's time for market to be traced. And then when you go and it will hit stop loss. So you need to be very careful when you see stuffs like this. And most times, stuffs like this usually comes with an engulfing candle, either a bearish engulfing or a bullish engulfing candle. So you need to be very careful on how to use a doji. Now, when you talk about doji has three different types. We have the dragonfly, which is also known as doji. It's called dragonfly doji candlestick. Then we have another one that is called the gravestone doji candlestick, which is this very one is called what? Gravestone candle. Gravestone, this very one my console is on, is known as the gravestone doji candlestick. So in this type of candlestick, we are saying that the what do we call it? Yeah, we are saying that buyers were able to, the price opened here. You get, so in this, let me use my console. Price opened here. So what happened here? When the price opened here, buyers were able to do what? To push the price up to this point. And then sellers came in and they pushed the price heavily back to the opening price. So in this type, you see that what happened now? Sellers had what? There were a lot of sellers in the market. So you need to be very careful in trading this kind of candlestick. So because whenever you see this candle, you wait for the next candlestick to confirm that yes, this is a bearish market trend that is coming. This is a bearish move that is about to happen. Because here you are seeing that there are a lot of sellers in the market. But when you see this, this very one, it shows that there is indecisiveness. This very one shows that there's indecisiveness in the market. So it could either be a bearish move or this one could either be a bearish move or a bullish move. But mind you, if the current trend of the market is an upward trend and this candlestick appears, wait for the next candlestick to confirm a bearish move. If it's in a downward market trend, and this candlestick appears, wait for the next candlestick to close to confirm a what? A bullish trend. That is how this market, that is how this candlestick reacts.